Wednesday, January 24th, 2018, Monaco 64, home of alternative economics and contrarian views. Early market update. It's around 7:30 a.m. London or 2:30 a.m. New York time. The main thing I'm seeing right now, and it's fairly serious, I would say, is the continued meltdown in the US dollar. We're, as basis the dollar index, we've broken through 90, the 90 level, which is an important level. Right now we're at 89.97 dollar index. It is a little bit delayed. The low tonight, overnight, has been 89.82, and I've had requests for a look at the technicals in the dollar index, where the next levels are, and I will go through that as well. I will go through also the dollar yuan and the gold price. So where are we right now in terms of other markets? I'll quickly go through. Spot gold is only up about $2. It's at $13.43. The high's been $13.43.90. That is the recent high of the year there. So you can bet that the gold cartel is going to try to keep it from going through that level. But I think it's inevitable now that gold will trade higher. Silver will catch up. I know it's lagging a bit. 1706 right now. The Dow's up 25, 26,232. The S&P is up 1 point. NASDAQ is basically unchanged. In terms of the currencies, the pound is up a 0.25% above 140. It's at 140.34, up 34 pips. The euro is up 17 pips at 123.16. And the dollar is breaking through, well, testing right now here, 110 versus the yen. Overnight, the low has been 109.79. We're right now at 110 exactly, down 0.25% roughly. Dollar yuan, 640. Crude oil, 64.43. So as I said the other day, crude just keeps going back and forth around 63, 64. Still looking fairly good. Not surprising seeing the weakness in the dollar. First, I want to look at a long-term chart of the dollar. It's a weekly chart going back to 2006. And you can see there the low in the dollar index in 2008. That was at 70.69. That's when gold topped at 1,031. And in spite of that, some people say that gold hasn't done well. In spite of that, even though the dollar in 2011 went up to made a low of 72.83, which was higher from that low in 2008. Gold went from 1,031 to 1,900. So actually, gold was so strong that it went up even when the dollar went up. If you take the low from 2008 and the high at the beginning of last year at 103.85, the 38.2 retracement, which is a Fibonacci retracement level, important, you know, the mirror retracement of the 61.8 retracement, which is the golden mean, that was at 91.17. So you can see there when we correct, when we're going down to the low of September last year, we held that 38.2 retracement. We went through it a little bit, but it corrected, and then we went back up, and now it's failed and it's coming right back down, broken through that level at 91.17, and now we're even testing the 90 level. You can see there's a few levels here, Fibonacci wise or retracement wise. We've got the 50% at 87.26. And we got the 61.8 at 83.35. And we got some highs also. Let's say the previous important high in July of 2010, which was 88.70. So we could see some support there, but we could very easily go very quickly to that 87.26 level. We could see a bit of consolidation between 91 and 87 for a while. Sometimes markets do that. They retrace between the 50 and 38.2% marks, or it could just blow right through that 50%. We'll have to see how sickly the dollar becomes, but right now it doesn't look very good. Gold. This is a daily chart of gold going to about a year back, and I've got the 50 day moving average, which is the black line. The orange line is the 100-day moving average, and the green line is the 200-day. Notice how we're actually the 50 day moving average is moving above the 100 just now. We're at 1291.69, the 50 day, and the 100 day is 1290.97. So that's very positive for gold, because with the moving averages, we want to see the 200 being the lowest, the 100 being the second lowest, and the 50-day being the highest. That's when the market is moving up and in a bull market. So that's very positive there. We're just crossing that that line in the last, well, today actually is just crossing it. We can see that the high for the year in gold is, just basically 1344. So right now we're at 1343.70. And the high has been 1344 today. So we're very close to a move higher in gold. And I said I wanted to look at the Chinese yuan. Yeah, so because the Chinese yuan is not part of the dollar index. So, but you can see that even against the Chinese currency, the dollar is very sickly. Beginning of 2017, it was trading at 696. And we're now at 639. So you wonder why President Trump keeps going on about trade with China, that China is like cheating, or is taking advantage of exchange rates. But the country that is doing that at the moment, it looks like the United States, with the dollar coming off, and the other currencies in the world becoming stronger. So, what about the bond market? Bond markets have calmed down a bit. I guess the Exchange Stabilization Fund, which is run with money that was confiscated from Americans in 1933 with the Gold Confiscation Act. That's how this fund was started. That's still there, and it's probably a huge fund now. I'm not sure. It's probably the biggest hedge fund in the world. It's the original sovereign wealth fund, if you want to call it that. And they can always keep the try to keep the bond market under control, because a weaker dollar, you'd think, would hurt yields, but would hurt the bond price, because that means foreigners will not be as attracted to buy U.S. bonds. But we also saw the same thing happen when we had Brexit in the UK. Bond yields didn't really go up, even though the pound went down. That's how manipulated these markets are. So right now we're at 2.62, the 10-year yield. The recent high has been 2.66. So yeah, they're still under control of these yields, but they're creeping higher. So what does it mean, the weaker dollar? Well, for the whole world, I think it will mean higher inflation. And why do I say that? Well, because the dollar is the basis of every other fiat currency. And if that fiat currency, the dollar, is losing value, it will mean that things that are tangible are going to be gaining value. And right now, I know gold hasn't done well in the major currencies outside the dollar, but I think that will happen. And for the U.S. domestically, it means higher inflation as well, higher costs. We've seen that in the UK after Brexit, and we should see that in the US as well. How do you protect yourself? Gold and silver, physical gold and silver, trying to be outside the dollar as much as possible. Even holding tangible assets, even the stock market now has been a good hedge versus inflation. But how long that will last, I don't know. Not advising people to do anything. I'm just telling people what I think. So that's it for now. Dollar looking pretty vulnerable, and we'll keep an eye on it. Gold looking pretty good. 1344, the key level. So if you enjoyed this video, please like, share it, subscribe to my channel on YouTube if you haven't yet. Follow me on steemit.com and on Twitter. I'll talk to you later. Bye.